Very special guest now, Mukesh Bhutani is back, of course, in a budget which he says no tax changes. I'm not sure how much tax-related stuff we have to talk about, but some of the other directional questions. So it's great to have you back with us. And of course, Sunil Vachani, founder and chairman of Dixon Technologies. We were just talking about electronics, the largest, manufacturing area anyway. And as India tries to become the alternative to China and who knows, Taiwan perhaps as well, who better than you to tell us how that story is going? What did you hear in the budget? What needs to be done to enable us to achieve that dream?
Thank you, Vikram. I think, there is no doubt that we in India and the industry are sitting on a very, very large opportunity. And this opportunity of making India the next hub for electronic manufacturing. And I think if you see it in terms of numbers, right, if you see the global market, it's almost $900 billion in terms of the outsourced electronic manufacturing. And India is just 2% of it. Even a country like Vietnam exports almost $130 billion worth of electronics, from the country. And right now, what we are doing is hardly about $20 billion. So I think there is a long, long way to go.
But 2%, what percent would China be? What percent would...
I think China is the dominant player as far as electronic manufacturing is concerned, right? And I think if you look at the market size of some of the products that we talk about, so if you look at air conditioners, a product like washing machines or televisions, I think China does almost 10x of us. But coming back to the budget, I think, yesterday there were some significant announcements which were made. And these came in terms of the duty reductions. And I think I'll tell you why they're significant is one, because they help improve the Indian industry's competitiveness as far as the domestic market is concerned. Two, I think it will give a huge fillip to the domestic market for mobile phones also, because eventually these duty cuts will be passed on.
But I think what is interesting that those duty cuts were announced one day before the budget. You would have expected to see them
that's right. Yeah, that was surprising, but I think definitely welcome, no doubt. But I think what is most significant is that when we're looking at exports, global competitiveness, higher duties tend to get passed on, when we're looking at exports, even though our intention is that we don't export our taxes and duties. But let's appreciate that the tier 2 and the tier 3 suppliers eventually do not get refunds of these duties, so they get passed on. So I think what we need in the industry is not high duties, we need a correct duty structure. And I think that's why this step taken yesterday was very significant.
All right, Sunil, thanks for joining us. Before I come to you, very special guest joining us, Amitabh Kant, the Indian Sherpa to G20 is with us right now. Mr. Kant, thank you so much for being with us. Just wanted to get your first reaction to this interim budget that we've just heard.
So Vikram, first of all, I think it's the budget by a very confident government, which is very clear that it should not undertake populism in an election year. It will come back and take far-reaching measures. Secondly, it's budget by a government which is taking a long-term approach and saying that the real golden period of India will be the run-up to 2047. And therefore, you have to keep your macroeconomic fundamentals very strong. And that is demonstrated by the fact that the finance minister has brought down the fiscal deficit to 5.1% and says that it will come down to 4.5% in the subsequent year. So a clear roadmap. And that really means that the government will borrow less from the market. And when the government borrows less from the market means that interest rates will come down. And when interest rates come down means that the private sector will be able to borrow at a much lower rate of interest. And that in the long run is critical. To my mind, that's the major signal which has been given by this budget. Because the government had taken its capex spend very substantially. It's from 2013-14, it was just 1%. It took it up to 3.3% last year. It's taken it again to 3.4%. But to my mind, what it is aiming for is of crowding in private sector along with government capex spend and really pushing for private sector to go in and drive India's growth in the coming years. And that, to my mind, is really the key factor. Secondly, I think it's some of its assumptions, particularly its assumptions on nominal growth, is on a moderate size, and side, and I think you'll have, in the end, you'll probably end up with better growth. Thirdly, the focus on some key areas like putting in about 1 lakh of crores for R&D spend is huge, because the private sector will then be able to push for deep tech. That is what India needs. India needs to grow in sunrise areas of growth. India needs to really drive its economy in a range of new areas, and deep tech is necessary. So if you are able to push for R&D with that 1 lakh crore, it'll be a major driver. The
Mr. Kant, in fact, I just wanted to ask you. Yeah.
Yeah. So
Right.
that 1 lakh.
Mr. Kant, I just wanted to ask you actually. Mr. Kant, I actually wanted to just ask you in a little bit more detail about that 1 lakh crore rupees, because it's got a lot of people's attention. Now, you, of course, have earlier, Niti, and then even now you work very closely with a number of very bright young people doing startups, coming up with great ideas. Indians are innovative. Indians have set up some of the finest tech companies anywhere on the planet. What is your own sense of how this 1 lakh crores can best be channelized so it does get to people? Some young kid who's coming up with some new technology in a hostel room somewhere gets access to capital to be able to develop that and build that up and take that idea up at scale. How can this be done in the most efficient manner, according to you?
So, Vikram, this 1 lakh crore is really amount for R&D. This is not for deep tech. This is for R&D, where private sector can utilize it over 50 years at very low rates of interest. But what you are talking about is the need for driving deep tech through young startups. And that is critical. And to my mind, what the government has envisaged, of course, is they've talked about deep tech for defense. And defense really cuts across many of these areas of growth. Many innovations, when they happen in the defense area, they spill over to information technology, they spill over to energy and many other areas. And once you have a fund of funds, the basic due diligence will then be done by the venture fund, who will then be able to take the risk is taken by the venture fund, but then he utilizes fund from the fund of funds. Much of the success of the Startup India movement is because of the fund of funds which was created in the SIDBI. And I think that needs to be given a huge fillip for the deep tech sector. That's critical. And the third, I think the key area which the government has talked about is the 75,000 crores for states which are reforming themselves. And for them to use the 75,000 crores for infrastructure. And it's all milestone based. So the private sector, what will happen as a consequence of this is that you are really incentivizing the states to go in for reforms. You are incentivizing the states to push for infrastructure creation. And there again, the private sector will come in a big way. So the ultimate beneficiary of this also will be the private sector. And lastly, my view is that the focus on solar energy, electric vehicles, because if you are going to give 300 units free to those who install solar rooftop, means you are giving a benefit of close to about 15,000 rupees of electricity to the household. So that's a big incentive for people to put up solar rooftop. So that plus charging stations, electric vehicles, plus pushing for connectivity, railway connectivity to cement, minerals, ports, all this will be a big driver of infrastructure growth in the coming years. And that, to my mind, will reduce the cost of logistics in India in a very, very substantial way.
So if you were to look at the last 4 or 5 years and look at the roadmap that's being done out here, do you think that massive public spending on infrastructure that we've seen, railways, airports, ports, the road building program which is happening, is that something which you think is one of the most critical aspects in unlocking what was potentially one of the biggest bottlenecks to the rise of India and the growth of India. You couldn't become the third largest economy in the world if you had third world, infrastructure. Is that the reason why, and you think the government is going to go on spending this money on infrastructure just to make sure that you have to reach the highest quality of infrastructure all across the country?
So Vikram, if you look at it from a 2013 perspective in percentage terms, till the last year, you had a 592% increase in capex allocation. It's gone up from 1% to 3.3% of your GDP. So that's huge. And that's why you've ended up creating some great roads, some expressways. You've been able to build houses. You've been able to, improve your railway, all that. And that was necessary during that period when private sector had taken a retreat. What the government is now trying to do is, by making only a marginal increase in your capex from 3.3 to 3.4%, the government is saying that we will now crowd in private sector into many areas of growth. And therefore, it has kept the fiscal deficit at 5.1%. Now, if you were to increase your capex expenditure, many people are saying that capex expenditure there was potential for greater capex, but the more capex you do, then you increase your fiscal deficit, and therefore your lowering of interest rates will not take place because the government borrowing will take place. And therefore, it was very important that the government keeps it at 3.4%. Government focuses on bringing down bank rates, the interest rates down, and government focuses on bringing in private sector into infrastructure on a long-term basis, because efficiency, productive efficiency, better quality infrastructure, as you've seen in airports, all happens when private sector does the design, it does operation, it does maintenance on a long-term basis, it does toll collection. You'll have better quality private sector investment.